Hi everyone, welcome to our Provider Relief Payments webinar. Erica and I have been doing these recordings for pharmacies and home infusion providers, but today it's a little bit special. We're bringing you this webinar in partnership with NHIA, the National Home Infusion Association. As a member of NHIA ourselves, we wanted to provide up-to-date information related to these payments and what to expect in the future, specifically for our fellow members. As always, I am joined by my colleague, Erica Ash.
Hi, Wakaba. I'm so happy to be here today. And today we actually have a special guest, Kyle Gilster, who many of you may know because he presented to NHIA in the past. So he is our Washington guru and is going to bring you the most up-to-date information about what's going on in Washington and what he expects to see in the future. But before we get started, we want to let you know that this recording is not legal advice. If you have specific questions, you should definitely reach out to your attorney. And of course, we would also be happy to help. So as a quick overview, first Wakab and I are going to walk you through the mechanics of the Provider Relief Fund with the initial payments and background, attestation and terms and conditions, and then your ongoing obligations if you decide to keep the money. At the end of that, Kyle Gilster is going to provide us with a legislative overview of the bills that have already been signed into law and some of the relief, like the Paycheck Protection Program and the Economic Injury Disaster Loan Program. And then Kyle's also going to provide us with an update on what's going on in Washington right now and what we can look forward to in the future.
Before we get started, at the outset, I should mention that this webinar relates to the first set of money that came into your accounts that just landed that had HHS payment on the memo line. It's April 22nd, Wednesday, and the new piece of legislation is expected to pass tomorrow, the 23rd. Although we think that the next set of payment is going to be roughly the same with respect to criteria and determination, although we'll give you an update on that when that passes. But I just wanted to mention that at the outset. So Erica, with respect to that first set of money that came into the bank accounts that landed, I know a lot of providers got it, wired into their account. Again, it said on the memo line HHS payment. And so can you give us a little background about where that came from, how that was calculated, why did you get that money, all of that stuff?
Yeah, definitely. So this money was allocated as part of the CARES Act. And so the total amount that was allocated to HHS for providers was $100 billion, but the first money that just dropped was $30 billion. So that's like just a portion, and then the rest they think is going to go to like rural hospitals and providers that have been hit hardest by COVID-19, and that's how the rest of the 70 billion will be allocated. But right now we're focusing on the first 30 billion because obviously when you get a payment from the government just dropped in your account, you want to make sure you're doing the right things with it and you don't want to have to pay it back later or anything. So first off, this is a grant. This isn't a loan like the PPP can turn into a loan. This is money for providers to deal with this crisis. There was no application needed. And so how they determined how much of this 30 billion the providers are going to get was the individual amount that each provider billed Medicare fee-for-service in 2019. So there was $484 billion total that was billed to Medicare fee-for-service. And then whatever portion you billed that amount, that's the portion of the 30 billion that you got.
And just to clarify, when you say PPP, for our listeners who might not know what PPP is, that's the Paycheck Protection Program. And that was is that something that you had to apply for?
Yes, so that went through the SBA, but you didn't apply directly to the SBA, like the EIDL, which I think is Emergency something loan. That went directly through the Small Business Association. For the Paycheck Protection Program, that's administered through your banks.
So I guess the difference is this is essentially a grant. You're given that money as opposed to a loan, but like the payment protection, there's some strings attached to it, right? Which we'll discuss in the next few slides. So let's talk about the attestations and the terms and conditions. When you receive this money, you have 30 days in which to attest that you received the funding and then that you are going to comply with the terms and conditions, which I'm going to ask Erica to talk about in a little bit here. There's an attestation portal on the HHF's website, and so you're supposed to go in there and then attest that you actually received the funding. And you have 30 days within which to do this. It's from the date of receipt of the funds, right, Erica?
Yeah.
Um,
But what if, let's say, I don't want to agree to the terms and conditions and I go on and attest?
So if you don't attest within the 30-day time period, right? Like you forgot or you're like, yeah, I don't want to attest. HHS is going to deem that you did receive the funds and that you do agree to the terms and conditions. If you want to return the money, I believe there's information in the attestation portal with respect to how to return that money within the 30 days. So then let's talk a little bit more about what you are agreeing to. So Erica, can you tell us a little bit more about the terms and conditions?
Definitely. So the terms and conditions tell you essentially how you can use this money. And there's some specific provisions in there and specific prohibitions. So, for example, you're not allowed to use the money for lobbying. You're not allowed to use the money. I think it's for anti-gun control legislation. I think abortion providers aren't allowed to use the money. So there's some specific prohibitions in the terms and conditions. And then it also has some general prohibitions and parameters about how you can use the money. And those kind of fall into three buckets, which walk about, I know we wrote an FAQ about, if you want to talk about those.
That's right. And speaking about the FAQ, this webinar is meant to be a complimentary webinar to the FAQs that we just drafted related to this provider relief fund. So if you want to go into more detail about, we actually answered NHIA members' actual questions in there. So if you have other questions, we highly encourage you to go and check out our FAQ. But the way you think about how you can use these funds is essentially broken up into three buckets. So the first one is lost revenue attributable to COVID-19. So that's if your business slows down because of COVID-19, or, we think of it in terms of like your ASCs, right? Like elective surgeries, you weren't allowed to do those for a while. With respect to the home infusion industry, a lot of our clients, though, they haven't lost revenue because I think a lot of patients are trying to switch to home infusion as opposed to going in the infusion suite in a hospital, for example. And when we talk about lost revenue, essentially what the government doesn't want, and again, specific guidance hasn't come out yet, so, this could certainly change, but how we read it is that the government just doesn't want you to get a windfall from this. They want you to use these funds so that you remain status quo, what you were before, to make up for that lost revenue, but it shouldn't be used as a windfall. The second bucket is care for COVID-19 patients. And when you say, one of the questions that NHIA members posed was, well, what if we don't specifically treat COVID-19 patients? Well, the HHS director, Seema Varma, actually mentioned that anyone could be a potential COVID-19 patient. So as long as you are treating a patient, Seema Varma has at least said that all patients are potential COVID-19 patients. And then there's the expenses attributable to COVID-19. Interestingly enough, Erica, legal services, right, are COVID-19 expenses attributable to that. And that's because a lot of our clients have called us a lot more than recent when they're doing their normal course of business, because they needed advice related to how to tackle this COVID-19 issues, whether it be, we're lacking PPE, what should we do, or one of our patients tested positive for COVID-19. So a lot of you're calling your legal counsel can be used for COVID-19. I mentioned PPE. Oh, go ahead, Erica.
Oh, sorry. And to add to what you're saying too, an important limitation on all of those is that you can't use the funds for a cost that another party is responsible for reimbursing. So let's say you have some business interruption insurance and you make a claim and your insurance is responsible for reimbursing you for the lost revenue. Well, then you can't take these funds and then also apply them to that. Is that correct, Wakaba?
Yeah, that's right. So you essentially can't double dip, right? You can't use these funds to pay for something that someone else would have paid for. But something like PPE, you needed to get more PPE, you had to pay more for that. That is an expense that can be used, or these funds could be used for those additional expenses. So, Erica, now that I have the funds, right, what are my ongoing obligations and how do you keep track of it? Are there any like best practices that I should be following?
Definitely. So, keeping track of these funds is going to be extremely important for all providers, no matter how much money you received. Because in the case that you get audited, you want to be able to prove that you used the funds in the right way. So, first and foremost, if you have separate tax ID numbers, let's say you have 2 or 3 entities and they all billed Medicare fee for service and they all got payments, it's really important that you make sure that these payments and accounts are kept separate, and then the expenses for each are kept separate. That way you can account for each one, and that you use the money correctly for each one, and you don't accidentally use money that was, let's say, reimbursed under one program for an expense and then accidentally allocate money from this to the same expense, so it looks like you're double dipping. So good accounting is extremely important, and that can be a daunting process. I know for someone like me who is not a math person, that's really scary. So you are allowed to also use these funds to go out and maybe hire an outside accountant to help you set up the accounts with the necessary financial controls and put policies and help you develop these policies and procedures so that you can ensure you're doing everything that you need to do. And Wakaba, correct me if I'm wrong, but we got an FAQ question about, can I essentially take the money out and use it for whatever I need to and then replenish something that maybe wasn't an allowable expense?
Right. And I guess technically you can, but it's just that I think it gets, from an operational perspective, I think it could get really hard to keep track of the funds when you use it at the outset for whatever you need to use it for and then replenish it. Like, so if you have good mechanics and processes for keeping track of how much you pulled and how much you're replenishing, I guess you can do that. I think though at the end of the day, and actually one of our colleagues wrote a blog post about this related to the potential consequences of the misuse of funds, and it's actually linked in our FAQ. So if you're interested in that, please go to that and check it out. But at the end of the day, what we don't want happening is, when all of this is over, the government comes in and audits you and says, well, you misused the funds, repay it. Or worst case scenario, they're like, well, you completely misused it and now there's going to be some sort of false claims liability. So that's why we're cautioning you and making sure that you keep track of these funds and keep track of how you're using these funds, because of the strings attached with the terms and conditions.
And to your point, Wakaba, about coming in and getting audited, the CARES Act actually did set up a special committee to audit how people are using funds that they received under the CARES Act. So it's definitely a possibility. And so with that as well, if you received over $150,000, then you have to submit these quarterly reports that detail how you use the funds. And this is pretty standard for HHS grants kind of across the board. And so we provide some sites for you. Unfortunately, there's no form document for this reporting, but I mean, entities have done this. So, there might be like resources and things like that if you contact an attorney or an accountant that deals with these issues.
Right. And we're still waiting. I mean, the word on the street has been that there's going to be additional guidance released as to, if you read the terms and conditions from us, from a lawyer perspective, I think we still have a lot of questions related to, for example, lost revenue. Like, what does that mean? What if you don't have lost revenue? Questions like that. Word on the street is there's supposed to be more guidance coming out. We haven't seen it yet, but hopefully when that guidance comes out, we'll understand a little bit more about how to detail the use of the funds, how to keep track of it, what HHS might be looking for in the future. So when that does come out, we'll be sure to keep you posted. All right, now that Eric and I have talked about the Provider Relief Fund and the mechanics related to that, now we have our special guest, Kyle Gilster, with a legislative update. Kyle?
Hey, Wakba and Erica, thank you for the opportunity to join you in this presentation today. I'm doing this from Washington, D.C., where our law firm has an office. I want to give a Washington, D.C. update where we talk about the 4 different things that Congress has done in response to COVID-19. I'd like to start things out. I hope everybody is well and healthy. In terms of the 4 different things that Congress has done in response to COVID-19, the first thing they did was what is called the Coronavirus Preparedness and Response Supplemental Appropriations Act. And what this bill did is provided about $8 billion supplemental appropriations as part of fiscal year 20, plussing up the accounts for Health and Human Services, CDC, NIH, FDA, to help with the fight on COVID-19. The second part was what is called the Families First Coronavirus Act, or Families First Coronavirus Response Act. And what this legislation does is primarily work on existing employment laws and some tax provisions, including the employer-provided sick leave provisions, the Family Medical Leave Act, and other unemployment insurance programs. I'm not going to go into detail on that, but what that does is it helps employers be able to take care of their employees. The third part of the congressional response on COVID-19, and the response that by far is getting the most emphasis and press, is what is called the Coronavirus Aid, Relief, and Economic Security Act, also known as the CARES Act. There are 2 portions of this. I'll briefly talk about Division A and then briefly talk about Division B. Division A, among other things, provides rebate checks to individual Americans, increases small business lending, extends the scope of unemployment insurance, and provides particular economic stabilization for airline, restaurant, hotel, and banking industries, as well as creates a new hospital emergency fund grant program called the Provider Relief Fund. What I would like to do right now is focus in particular on the small business provisions that are part of this Division A of the CARES Act. What this legislation did was, for the first time, created a program called the Paycheck Protection Program, otherwise known as PPP. What PPP does is a small business can get a loan through a private lender, and that private lender has to be an SBA approved lender. That lender in turn can provide a loan which can be 100% forgivable to an entity that otherwise is defined as a small business. There are 4 different criteria of how you define small business. For purposes of today, I'm going to simplify that into really 2 main ways for a business to qualify as a small business. The first is if you have less than 500 employees. That doesn't count in affiliated. As it relates to affiliated employees, you have to account your affiliates to make sure you sit under 500, but that's a much longer and larger discussion. The second category deals with what are called NAICS codes. Each small business has an NAICS code, and on those codes, you can have a different standard to be defined as a small business, which could either be a revenue standard or an employee standard, which may be higher than 500. Bottom line is, if you do otherwise qualify as a small business, you can apply for the Paycheck Protection Program. What's important to know about the PPP is that it is not per se a needs-based program. You just have to show some adverse impact of COVID-19 on your business. And candidly, I would argue that most every business in America that is small could easily meet that hurdle that they have been demonstrably impacted by COVID-19. So bottom line is you can apply for a loan which is forgivable. The amount of that loan is either the higher of $10 million or 2.5 times your average monthly payroll, based on your average monthly payroll of either looking at the data in 2019 or 1 year prior to you applying for the loan. So you can take the higher of those 2 amounts. That is the amount that you can get in a loan from SBA, from your SBA approved lender. Bottom line is, if you keep everybody and don't let anybody go in terms of your employees, and maintain your wage structure, you're in a position to get 100% forgiveness of your loan. If you have to let some folks go, if you have to significantly reduce their wages, you won't be able to get that part of the loan forgiven. Bottom line is the Paycheck Protection Program is there to help you with things such as payroll, lease, mortgage, interest on any debt that you have, to help you stem this COVID-19 turmoil. If for that portion of the loan that is not forgiven, it then just turns into a 2-year loan in which you're able to defer a significant amount of that for some time. So that is what is called the Paycheck Protection Program, and that really was kind of the cornerstone and centerpiece of this legislation. There is a second bill or second provision on the small business side, which is called EIDL, which is the Economic Injury Disaster Loan Program. What EIDL deals with is that loan goes directly through SBA rather than through a private lender, and that loan cannot be forgiven. And that loan is based on a criteria of how many employees you have and your need. That program can not only be used for payroll, but fundamentally is used for working capital for small businesses out there. And the max that program can get is $2 million. What's attractive about that program is there is a grant component to that program as well. And that grant component then, in turn, you can get a grant of up to $10,000 if you apply for EIDL. And that grant you do not have to pay back. Secondarily, and I'll come back to those two SBA programs in a minute, but as it relates to the CARES Act, the program also provided additional administrative and appropriations for healthcare, the National Strategic Stockpile, which will help with personal protective equipment, PPE, more money for BARDA, more money for hospital preparedness programs. Moving on, and this webinar is very timely because yesterday, April 21st, the U.S. Senate passed what is called the Paycheck Protection Program Increase Act of 2020, hot off the press. Tomorrow, the House is expected to vote on this. And what this bill does, it does two primary things, actually three primary things. It increases funds for the small business programs, increases funds for the Provider Relief Fund, and also provides some money for COVID-19 testing. So as part of that, I'd like to briefly talk about what this legislation does, which the House is expected to pass tomorrow, being the 23rd, and then the President, I will likely sign it by the end of the day tomorrow, being the 23rd. In terms of small business, so the initial CARES Act put about $350 billion, I think it's $349 billion, for the PPP. Well, guess what? They ran out, and they ran out quite quickly. They ran out in about 3 or so weeks, and they have been out of funds for now about 5-6 days. This bill that the Senate passed yesterday will provide $251 billion in additional funds for the PPP. In addition to that, it'll also provide $60 billion for small lenders in underserved areas and rural areas to help reach those markets of small business adversely impacted by COVID-19. In addition to that, I mentioned the EIDL program before. That's the loan and grant program directly through SBA. Congress then provided $60 billion for that program, $50 billion for the loan program, $10 billion for the grants. In addition to that, and I know Wakaba and Erica referenced this earlier, but as it relates to the Provider Relief Fund, $75 billion extra was put into this fourth stimulus, or as many call it, Stimulus 3.5, into that legislation. Lastly, $25 billion was provided in this legislative bill for necessary expenses to research, develop, validate, manufacture, purchase, administer, and expand capacity for COVID-19 tests. This provision's gotten a lot of press. There was quite a bit of infighting between how much goes to the states, how much does the federal government ultimately distribute. Ultimately, where they came down was $11 billion was given to states and localities to purchase and administer these COVID-19 tests, and the remaining amount goes to the federal government. The remaining $14 billion goes to the federal government, dispersed amongst a variety of agencies such as CDC, National Institutes of Health, the Biomedical Advanced Research and Development Authority, also known as BARDA, the FDA, and there are some funds for community health centers as well. And up to $1 billion in this legislation will also be used to help cover the cost of the testing for the uninsured. So hot off the press, that is the most recent and fourth stimulus that is at least one house of Congress has passed, called the Paycheck Protection Program Increase Act of 2020. I expect the House to pass this bill tomorrow and the President to sign it shortly thereafter. So those are the four legislative bills that are being passed and signed into law. Stepping back on a macro for just a minute, clearly with COVID-19, I've seen it referenced, this is the most involved the federal government has been in the lives of people since World War II. And it's clearly a tenuous time. I do expect the federal government and Congress at some point to begin considering another stimulus bill. So this would be, many are calling it stimulus 4.0, but effectively, assuming 3.5, which we just talked about, is signed into law by tomorrow, it'll effectively be the fifth stimulus. One point of emphasis that many members are talking about is infrastructure spending, more money in aid to cities of all sizes. In addition to that, my guess is you may see some additional funds for the small business programs such as PPP and the Provider Relief Fund as well, because there seems to be an unbelievable demand for those programs. Stay tuned. I'll leave you with one thing that I think Congress is still wrestling with. The U.S. Congress, both the House and Senate, since its establishment, have always voted in person. They've never voted virtually. And from time to time, that's provided some challenges where, particularly in the Senate side, where members have been very sick and they need a vote, and somebody is literally wheeled up on a stretcher. And I think that happened under the Affordable Care Act. That's happened multiple other cases. With this infectious disease of COVID-19, I think the House and Senate are wrestling with how to potentially provide for virtual voting. As you might expect, it's not strongly embraced when you have over 200 years of voting one particular way in person. So that is something to stay tuned. One thing I am told that potentially you may see members of Congress just kind of come in groups, very small groups voting. When I worked in the House of Representatives, you'd have all the 435 members on the floor at the same time. Clearly, that's not a good example of social distancing. So Congress, just like everybody else, is having to wrestle with social distancing. With that being said, stay tuned. I think the country will continue to look to DC for answers on COVID-19. Thank you for this opportunity.
Thank you so much, Kyle, for that useful information, and thank you so much for listening. If you have further questions, check out the FAQ available through the NHIA portal. Also, feel free to reach out to us if you have questions that the FAQ doesn't answer.